Greetings, members, one and all of the Salivation Nation. It is now being measured. Wealth is falling, dropping for the first time in 2 years, as we're seeing. And why is that? Well, it's inflation. We're seeing an increase in debt as well. In this video, we're going to talk about that and how to protect yourself against this falling wealth. Let's explore! Indeed, the Epoch Times has a good article here talking about how the wealth across U.S. households has dropped for the first time. And they're tying it to the stock market, but there's other things too, and there's other ways that wealth is declining. In fact, there's a recent report that I heard about how side hustles are now being engaged in not for discretionary income, but just to make ends meet. That's how bad it's getting for sure. As I'm going to talk about that. Before we get into this, I want to let you know that I do post videos on a daily basis. Some of you have complained about not getting notifications. I do encourage you to press the notification bell, but it is hit or miss at times about whether or not the algorithm catches my videos. I posted a video just this morning, I think that was really kind of breaking news about gold in Russia. I encourage you to check that video out, but definitely sign up for notifications. Subscribe to the channel. I do post daily videos. I like to keep up with the news. And if you don't want to miss anything, those are the options. But the most important way for you to keep up is to bookmark the channel page. That's right. Go to the Salivate Metal YouTube channel page and bookmark that. And you will always see the latest videos there if you just log on and check it out there. If you don't want to rely on the algorithm, that's a way to be able to get the notifications there as well. I'm also on Rumble, but nonetheless, it's kind of breaking through there. But the YouTube is kind of where most of the views come from. So I encourage you to do that. And if you would press the thumbs up button, it will help the algorithm as well. So let's get into this article here. Fascinating indeed. Wealth across U.S. households has dropped. And this is for the first time in 2 years. A Federal Reserve report was released, and now it's being measured here to see that it has dropped. This sizable stock market declines that wiped out $3 trillion in the first quarter. The loss was partly offset by a $1.6 trillion increase in real estate value and a high rate of personal savings. Household net worth declined $500 billion to $149.3 trillion in the first quarter, and down from a record $149.8 trillion at the end of 2021, primarily impacted by a drop in stock prices and robust gains in house prices, the Fed said. However, household balance sheets remained healthy overall through the first quarter at roughly $32.5 trillion above pre-pandemic levels. Bank accounts of households rose in the first 3 months of the year, with checkable deposits and currency gaining about $209 billion to $4.29 trillion, according to the Fed's data. Time and savings deposits rose about $59 billion to $11.28 trillion. The latest figures mark the first decline in household wealth since the onset of the COVID-19 pandemic in the first quarter of 2020. Elsewhere, household debt grew by 8.3% in the first quarter to $18.3 trillion. We'll look at that here momentarily. We have another story that talks about that, an infographic. Pretty interesting. And was slightly higher than the previous quarter, which the Fed said was a reflection of strong growth in both home mortgages and consumer credit. Home mortgages increased by 8.6% as home prices surged. Non-mortgaged consumer credit increased by 8.7%, supported by rapid growth in credit and borrowing and automobile loans. So far, we've not seen anything in this article which I think should be mentioned, which is very important as to why wealth is decreasing. The latest figures come from the cost of living continues to surge across the country. There you go, now we're getting it. April's annual inflation came in at 8.3%, falling slightly from the 40-year high of 8.5% in March. And now May's is coming in at 8.6%, which is a tenth of a percentage point higher than what was in March. U.S. Treasury Secretary Janet Yellen said that gas prices, which reached a historic $5 a gallon, were unlikely to fall soon. Yea, though, we have seen it fall consistently by 1 penny a day over the last couple of days here, marginally. It could very well turn around the other way. Several White House officials this week noted that gas prices are likely to surge over the summer, and I believe they will too. And also, we must make note that Biden has proposed a gas tax holiday, which there is a bipartisan opposition against that. Mainly, some people feel it's a gimmick, but nonetheless, I believe in any kind of tax relief. I'm for, but nonetheless, will it be passed down to the consumer? Let's hope it will. We'll see what happens there. Commerce Secretary Gina Raimondo said that the Biden administration has fewer and fewer options to bring gas prices down, except for the biggest option, and that is to release the restrictions on drilling for natural gas and oil in the United States. Release those restrictions, allow to drill anywhere they can on federal lands as long as it's safe, and obviously they will be safe in doing that, just like it was before Biden hit office, but there's no way he's going to do that. Federal Reserve Jerome Powell, chair, said in May that ongoing supply chain disruptions and huge geopolitical events going on around the world could wreak havoc with those plans, but the officials should control the controllable. Well, he's in his testimony just today, he said that the events going on in Russia are not the cause of inflation. We know what the cause of inflation is. Jerome Powell knows what the cause of inflation is. That is too much money being printed, to the tune of, over the last 2 years, over 40% of all the currency ever printed was printed in the last 2 years here. Now, let's look at this consumer debt further on this, and let's talk about this very interesting statistic and chart here from the visualcapitalist.com. The Federal Reserve consumer debt is approaching a record-breaking $16 trillion. Critically, the rate of increase in consumer debt for the fourth quarter of 2021 was also the highest since 2007, and that's really before we saw a big uptick in inflation. And so likely these numbers are even more now. 16 trillion, of course, this article was definitely more recent here, and this one is saying that consumer debt is, I think, was 18%, if I can find it here. Can't seem to find it, locate it right now, but it was in this article. We just read it. So I don't know where it is, but here it is, 18.3 trillion. 18.3 trillion, and this is showing 16 trillion. So it's substantially increased since then. But let's even going by these numbers, we can see trends in household debt and where it is. But let's look at the graphs here. We can see where they are. There was a big graph that they showed this, but I don't know where it is. It's not showing up on this page. Apparently, it's right there, but it's blocked out, and there must be a thing with this browser. But we can see how the housing versus non-housing debt has increased, and how that over the time period, and a lot of it probably has to do with inflation, and of course, rising rates and housing costs that we've seen. It's pretty crazy to see, but nonetheless, that's where we are at with the debt. Now, how do we protect ourselves from debt and from falling wealth? Because every time the dollar is printed and digitized, which is what they do, Federal Reserve Chair Jerome Powell even admitted to it, that's what is happening. These dollars are printed, and the faith that we have them is completely based off of the of what they tell us. It's government faith, faith in the government. And the full faith and credit of the United States government is what we have for our dollar. Gold and silver, their trust extends beyond faith in government. In fact, it is because of our questioning of the government and empires, epochs, generations, and agendas. Gold and silver do not have those. Now, obviously, they can be used and utilized to push any agenda. They can be, certainly their handling can be corrupted, but the metals themselves are what they are. They stand by themselves. That's one of the things about these hard assets, gold and silver. they stand on their own. They are what they are. Most of us in this community, we would use them for good to preserve our wealth. Wealth preservation tools, that's exactly what they are. And gold and silver, the various different forms, whether it be bars, or rounds, coins, it doesn't not matter. Whatever one it is, that is going to be the thing that will hold us, keep our wealth intact through the course of time. And that's just it. It does take time. But that's the way to protect yourself, by holding on to them, not buying them and selling them, hoping to flip them for a profit. That's not what you do with the type of gold and silver that you see on your screen right now. It's about buying and holding for the long course of time. You can lose big time buying silver and gold, especially silver, considering the premiums, if you sell at the wrong time. So therefore, it is incumbent upon us to buy and hold. And holding the physical, by the way, is the most practical way, and it's worth paying some of the premiums, even though some of the higher premiums we are seeing. Yea, though, there are ways to be able to save. I did a video recently that talked exactly about that. If you just scroll back on my channel a few videos ago, you will see I bought 2 more kilos of silver. I talked about how I got what would be considered regular premiums just a few years ago. For 1 ounce rounds, I got these bars for. So the deals can be had out there. You just have to look out for them. And you have to also be wise in how you purchase your silver and gold to be able to minimize any loss and to get your dollar cost average down. But that's the way to do it. Buying gold and silver and holding on. And being smart about buying it, by the way, not just breaking the bank to do it. You've got to be cautious and careful. And but nonetheless, there it is. Gold and silver is the best way. Now, there are other ways. The answer is not always just in gold and silver. To protect your wealth, you must be agile with the changing times in terms of inflation and in terms of the cost of goods and services. If you can, stock up on non-perishable goods and maybe even some services. You may find some services where the price has not changed or whatever. Take advantage of those things before they go up. Things are climbing fast. So does that mean buying extra toilet paper or extra non-perishable food items? Yes, it does. Stocking up to protect yourself from inflation on those and other things as well too. Being prepared for whatever may come is another thing. And develop relationships with people, with your local coin shop, with merchants. And, I think that's a key. Relationships are very important as you prepare. So there you go. Let me know what your thoughts are in the comment section below. A reminder again, I do post videos daily. And I would encourage you to bookmark the channel, press the notifications bell so you can be apprised of the latest video. And I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.